Good afternoon, everybody. Going to go over our Forex trades for today, Friday, March 11th. So we just had one trade, as you see here, in Euro Yen. We're going to go over that in a minute. But first, just want to talk about some economic news. There was really no numbers released today, but yesterday, as you know, the ECB made their decision on interest rates. They cut interest rates a tenth of a percent. They are now negative 0.40%. So basically just shy of negative a half of 1% interest rates in the Eurozone. They also, on top of that, they increased QE from 60 billion euros to 80 billion euros a month. And they announced that they're going to start investing in investment-grade bonds. So with all that, you have to ask, all right, well, what's next after investment-grade bonds? Are they going to eventually try to monetize junk bonds? Are they going to try to monetize the stock market? It's amazing what's going on. With all of that, the ECB gave us projections for 2016. They gave GDP numbers for 2016 of a growth of 1.4% compared to their estimate just in December of 1.7% for the entire year. And they now see inflation for 2016 to be just 0.1% versus their estimate for 2016, which they estimated back in December, of an entire 1%. So here it is, after going to be spending about $900 billion worth in 2016, close to, 900 billion euros, close to €1 trillion in 2016, yet they can't even project inflation. They can't project solid GDP growth. So how are they going to project? How are they going to create jobs? It's almost like central bankers, including the ECB, they have lost sight of what the goal is. The goal is to create a stable economy which creates jobs. Now they're just throwing, you know what, at the fan to see what sticks. Not good at all. With the announcement, the U.S. Treasury curve collapsed to the flattest since December of 2018. Since 2008, which was the financial crisis. That's telling you something is coming. How bad it's going to be, we don't know. But when you see Treasury curves that flat, it's just not a good sign. Then, an hour into, or an hour and a half into his press conference, it says he anticipates no more rate cuts throughout 2016 in his current view. Completely confusing markets. Markets went from one direction to the complete opposite direction with those comments. It's almost like, here's the ECB, here's Mario Draghi lowering rates to create stimulation. They obviously are looking for a weaker euro, but yet they make those comments an hour or so into this press conference, which makes the euro rally. Does he not understand how economics and markets work? You have to question if not only him, if the entire ECB and the Fed, for that matter, really understand it. Last night, Japanese government bond futures was halted. There was just massive chaos in government bonds in Japan, and this is one of the world's most safest bonds in the world is Japan. Almost par with United States Treasuries, and they had to halt the market because of the chaos that was going on. And then it only got worse this morning. This morning, the Treasury announced that Treasury bond market is basically broken. They announced this morning that failures to deliver soared for the week ending, basically the last week of February. It surged to the fails to deliver surged to 32.3 billion for the week. Okay, that's up about 140 million the same week a year ago. So, what is a fail to deliver in a bond market? You could look at it as a margin call. If you've ever traded a stocks on margin and you get a margin call, and then you don't deliver on that margin call, you then pay fines and penalties on top of it and interest. It's similar. I mean, it's not a perfect scenario, but fail to deliver is basically someone someone looking to buy that bond is not getting it delivered by the people selling it because the people selling it are selling it at losses and they're refusing to deliver the actual treasury bond. Why did it break? Two reasons. You have an enormous amount of shorting in the past few weeks in the treasury market. We've seen yields. They did dip down huge and then they started to rally. So we see a huge amount of shorts, and you have the Fed in there that they own a bunch of treasuries and they're still buying treasuries. As a matter of fact, even though they say QE is over, in 2016, and we've said this before in other videos, they're going to be buying about 50% of every new 10-year treasury that is issued in 2016. So you have a lack of liquidity and massive volatility, and this is what happens. And consequently, surprisingly, stocks rallied around the world. Media is saying that they re-evaluated the ECB's actions yesterday's and their comments. I'm not so quite sure that's the real reason. Usually you'll see a flight to quality, right? Into, say, United States Treasury or Japanese bonds, but you have the Japanese bond market being, futures market being halted. You have failed the delivers of 32.3 billion just for a week, compared to 140 million a year ago. That's an enormous amount of fails. It could be a flight to equities, just to have these guys that are investors, park their money somewhere rather than just sitting in cash where they're earning really nothing, right? So that, I think that's probably the real reason why equity markets have rallied around the world. So let's get to the one trade today, which was in euro yen. We were long 40% of this from 126.724 last night. Before we shut things down for the evening to go to bed, we threw an offer out there, 126.92. Got filled 126.921. It ran up to about 126.96, and then pulled back. Even if you were still in it, you wouldn't have been stopped out. And here it is now, late this morning, early afternoon, or I should say late this morning, because it's just 12 noon. It just ran through the figure of 127, so actually up a lot more than where we sold it. It ran all the way up to 127.26, so call it 30, 35 pips higher from where we got out. But either way, we'll take it. We weren't going to be watching it, so we just threw the offer out there. So we picked up 19.7 pips, or size adjusted 7.8. So we'll take that all day long. Unfortunately, just that one trade. We didn't trade yesterday because of the ECB, and then obviously a lot of setups were not there last night. And didn't want to get stuck in anything this morning either, although there were a few things looking pretty good. Don't want to be stuck in stuff being over the weekend, especially when you have so much uncertainty going on around the world. So that's it. We're going to wrap it up. If you're still trading now, good luck. If you're waiting for any signals, if any come out, they'll be coming your way. And have a great weekend. Assuming we get some action Sunday night or Monday, we'll do another video on Monday afternoon. All right, have a great rest of your day, and have a great weekend.